Hello everybody, welcome to the webinar. We'll be getting started with the fundamental analysis webinar here in just a moment. Before we get going, let's do a quick systems check just to make sure everybody's up and running okay. As long as you're hearing me clearly and seeing my screen all right, type okay in the chat box if you would. Okay, I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, just let me know. My name's Troy. I'm a senior account manager with AvaTrade, and I'll be leading the presentation this evening. We'll be focusing on some fundamental news. Obviously, China and the spread of this coronavirus is in focus. It's in most all of the headlines. We're going to take a look at some potential opportunities on the charts. Talk about what's already happened today and opportunities you could have already taken advantage of. Hopefully some of you did. And also what it looks like moving forward in terms of some potential movements. The good news is there's great volatility, some large potential on the movements so far today and also moving forward. So we'll take a look at that and work some strategy concepts that could pay off quite well. As we go forward, keep in mind, all investments have risk. It's no different when we're trading CFDs, spread betting, options. Forex trading certainly has its level of risk, but obviously it also has great potential for profit, which is why we're all here. No one trade is guaranteed to profit, quite obviously, but that's why we put together ideas about risk management, whether you're using stop loss or hedging. Those sorts of methods for managing your risk make sense, and we'll go over some ideas in that regard as well. Keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective to hopefully improve upon or build your trading strategy and move forward hopefully with better P&L on the bottom line from week to week and month to month. So if you're interested in reading the full risk disclosure statement, it is found on AvaTrade's main website. With that said, as long as we're talking about risk, if you have not checked out the AvaGo app, I would recommend that you do get it onto your mobile devices. It really is a unique mobile app that allows you to trade on your MT4 accounts and utilize some nice features such as Ava Protect, which is protection against losses, available on most all FX pairings, on gold, silver, and soon to be other assets. What this protection feature does is for a flat cost, allows you to pick different time periods, whether it's 6 hours or 1 day or 3 days, where no matter what the movement is, the only risk is the flat cost, the premium cost at the onset of the trade. And so you're covered against any losses during that covered time period. It's really a great feature, especially with times like this where there's huge volatility, there's the potential for really large profits, and you can take a shot and have a flat cost on the risk side for a defined time period. So it's something that if you need some help with that, I'll show you a page during the webinar here on our website where you can see a video about it and some ideas about it. And you also can obviously talk to your account managers for more information on how to utilize that protection feature. Again, that's on the AvaGo mobile app. And there are some other nice features on that mobile app as well. It calculates, if you put your stop loss distance or your take profit, the app will calculate your exposure and your potential profits for you. Okay, so in terms of what we'll cover today, there are two types of fundamental news. I think all of you or most of you are probably aware of that. Some types of fundamental news are more predictable in terms of timing and scope. We refer to those as regular economic events. We can find those scheduled for exact times and topics on an economic schedule. And we'll take a look at what's come in today and what will come in later today and through the night, so you can plan out accordingly your potential moves with the regularly scheduled economic events. And then also there's the other type of fundamental news, which we refer to as extraordinary economic events. And those are the things that we've been dealing with here the past few weeks that's really been driving the market. Are the extraordinary event that's occurring now would be the coronavirus. and just not knowing when the next article might be that it's spreading worse or getting better, or what effect it's having in terms of economies being shut down, like happened in China with the large quarantine areas that they had. And it's news article after news article that you don't know what it'll be or when it will be, and you have to be prepared for that type of fundamental news as well if you want to manage the risk side of things and also go after the potential profits that those types of unexpected breaking articles can bring. And so we'll talk about that on the live charts, how you can be prepared for the unknown and the potential that the unknown can bring when something like a breaking news article occurs that maybe is unexpected. All right. All right, so let's go ahead. Let's look at some of the fundamental news that's come in. And by the way, as we go, if there are any questions, comments, input, please just let me know. You can contribute or ask questions at any time. I'm happy to share ideas as well. Okay, so looks like a little bit of a rebound Monday is going on. Okay, if you aren't aware, obviously the markets last week tanked quite a bit in terms of stocks and indices around the world. The Dow Jones and some other major indices saw record drops in terms of one-day drops and weekly drops. Very, very fear-driven movements on the markets last week. All right, and so, and one thing, we'll talk about this, one thing that didn't happen was gold didn't necessarily go rising up with all this fear. But we'll talk about why that may have been the case and why that could change moving forward. So Wall Street gains as investors buy the dip. Okay, that makes sense. There are always investors after a week like last week that are looking to buy low and hoping for at least a temporary bounce back up. And that has at least occurred today, at minimum, a temporary bounce back up. And so part of the reason why this bounce is occurring, you see the article refers to stimulus measures in focus. Okay, and it's countries around the world talking about lowering interest rates, giving stimulus to help the economy. China has pledged to do that. The US now is talking about doing that, and other nations. And so, the two largest economies in the world, with China and US, talking about major stimulus with reductions in interest rates and government stimulus to the banks, etc. This is helping a bit of a rebound on the market today. Okay, it doesn't mean the fear's not still there, that the volatility's not still there. It certainly is, but at least temporarily here, there's a bounce back occurring, which can create some opportunity if you believe there's still fear yet to come. All right, and we'll talk about maybe what that might look like with some of these other articles. And so this is some of the regular economic announcements that came in today. There were some manufacturing numbers scheduled, some other factory numbers, and we can see US manufacturing activity came in bad, weakest since August. Okay, well, that's not good news. But then we have another article that says US construction spending increases to record high. That's seen as good news. Okay, so there's a mix in terms of the regularly scheduled economic announcements that came in today. We can see some negative news there, and then obviously this article is positive news. Record spending here for US construction. So that kind of gives mixed signals on the US economy. And then we move and we say, okay, Wall Street rallies, but trading remains volatile. All right, we see that. Everything's in the green here. Futures, Dow Jones, S&P, Nasdaq, everything's in the green. Dollar index is weakening. Why would the dollar index be dropping? Why would the US dollar be weakening against the other currencies if there's optimism on the market today? And I alluded to the fact that we're talking about stimulus measures. And in this article, they talk about the US maybe lowering interest rates soon, maybe by as much as 0.5% on the federal interest rate. What does that do to the strength of the USD if they lower interest rates in the US? If the Feds in the US are going to lower interest rate, what does a lower interest rate tend to do to the strength of a currency? Anybody know? Yeah, it makes it less attractive, tends to weaken the strength of the currency. But that's exactly why the stocks would be rising, right? Why the indices are looking at that as positive, because lower interest rate, cheaper money means you can expand and fund your business with less expense. You can hire people, expand, etc., take out low interest loans and expand the business for less cost. So, and this is the whole point of the Feds in different countries saying they're going to give stimulus, lower interest rates to try and counter the effect of what the coronavirus is having on things, to try and stop the big plunge that occurred last week in the markets. And so at least temporarily, the talk of these stimulus measures and lower interest rates are helping to turn the markets green today, okay? A pause in the dropping anyways. And so it makes sense that at the same time the markets are green, the US dollar is weakening today because of this talk about lowering interest rates, which, you know, excites the markets and turns them green, but weakens the currency. All right, so all of this makes sense. What we're seeing here in the numbers matches the headlines that we just looked at. Everything makes sense there. The USD would be weakening, that the stocks would be rising at the same time that central banks are talking about lowering interest rates, and specifically the US, alluding to the fact that they may lower as much as even 0.5%. And the interest rate in the US is already low. So that's kind of a big deal if they lower by that much. Doesn't mean they will for sure, but just the talk of it is weakening the USD and causing, if not a sustained rise, at least a temporary rise in the markets in terms of the stocks and indices. Okay, so then we move and we say gold climbs as bond yields tumble. Okay, so I alluded to the fact also as we got going that I would explain a bit about why maybe gold wasn't shooting up while the stocks were plunging. Why was gold being the safe haven? Why was it not flying up as much as you might think day after day last week as stocks were plunging? And the answer to that partially is in this article, okay? Bonds. Not only do people buy gold when as a safe haven when there's fear, but many times they also buy bonds because they're you know, backed by the government, backed by the banks as a guaranteed return. And so the prices on bonds were going up, 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 up as people were leaving stocks and buying bonds. And the yield then, the return that you get for buying a bond, if there's higher demand and everyone's rushing into buying bonds as a safe haven, then the yield, meaning the profit you would make by buying that bond, the banks say, well, we don't have to offer as much yield in return. We're raising the price on bonds because everyone wants them now because of the fear on the markets. And so we can lower the yield and promise people less of a return, and they're still buying them. And so now the yield has come down. The bond yield tumbles. Okay, that's what the headline says. The yield has dropped so much. The banks are saying, everybody wants our bonds so much now. They've lowered how much the yield will be to a point that now they're not so attractive anymore. So what's the next safe haven if bonds aren't paying enough now to attract people to them as a safe haven? What might they buy into next? Gold, right? It's a safe haven that is tested over long periods of time, decades and decades and hundreds of years as a safe haven that people tend to rush to in times of fear as well. So if bonds are less attractive, where else can they go for safe haven? Maybe gold. So maybe now's the time for an increased rush back into gold, now that the bond yields have tumbled so much. Okay? Type okay if you're with me on that idea. How bonds and gold are safe havens. Bonds are paying less now because so many people wanted them. Now that might get people to turn back towards gold. Okay, so that's always something to watch. If you're wondering, hey, there's fear in the market, why is gold not climbing? Look at what's going on with the bonds. And I bet the bond prices are climbing because everyone's buying into bonds rather than gold sometimes. And as the bond prices go up and the yields drop, then it's more likely that people will more and more turn to gold. Okay, so very important. Watch the bond prices and watch the yields And that can give you a clue as to when people may switch back into gold in favor of gold over bonds. All right, but they're both safe havens. Now, we'll be looking at gold then and seeing what's happened today with gold. And there's some writing on the wall maybe there that you may see as some potential opportunities coming. All right, so what else might we look at? Vice President in the US to meet with airline CEOs. Listen, everybody, we've got Boeing on our platform, and we talked weeks ago about the effect that this coronavirus could have on the travel industry. All right. And specifically, I mentioned Boeing on our platform as something you could look to short potentially if you think that the bearish news on travel could have affected Boeing, and boy, did it drop, right? There was no guarantee, obviously, but it made a strong move down. Now, we'll take a look at Boeing today, maybe with the way the market's pushed back up today. Maybe Boeing came up to a spot that is opportunistic if you think in the bigger picture there's still bad news for the airlines. Something to think about, a potential re-entry point now if you feel bearish on Boeing and other airlines in the travel industry. Okay, moving on. Here were the scheduled announcements today, and we see the pound had bad news. Okay, it's the only high-level announcement out of Great Britain, and you see the three bullheads, and it was bad, worse than expected, barely showing expansion on the PMI numbers, and some other numbers that were low too, mortgage lending in particular. So not great news for the Great Britain, and good news, so to speak, out of the European Union. The German manufacturing numbers better than expected, still not above 50. Below 50 shows industry contraction rather than expansion, but the contraction was less than expected. And so maybe a pairing euro against GBP, we'll take a look at that on the chart, probably did well today. These announcements were this morning. So you could have rode the euro up against the pound maybe through the day today. We'll take a look at what happened with that, whether that would have paid out well, and maybe some opportunities moving forward still. Now, before we get on the live charts and take a look at what this fundamental news has done and what you still could do on the charts, I promised I would show you where the AvaProtect feature can be found, and AvaTrade Go, the mobile app that has that feature. If you look under trading platforms, here's AvaTrade Go. You can download it anytime. Just use your mobile device to come to the website. Click on AvaTrade Go, and you can download it either in Google Play or the Apple App Store directly from these links, or you can just keyword search AvaTrade Go. You'll find it in your App Store, and you can download it. It shows you all about how to use it, the features that the AvaTrade Go app has, and specifically you can look about the feature I was talking about, AvaProtect, which is found on that app. And you can see here, this is what it looks like in the order window. You can pick 1 day, 2 days. Some of them offer shorter time periods, like by the hour, for protection. And really nice feature, especially if you expect big news, breaking news, high volatility, to know you're covered on the downside for a small flat cost for the risk during that time period, and still have maybe a huge potential for profit. So something to take a look at. Now let's get on the charts. I'll pull up my demo account here, and you're welcome obviously to have your live accounts open if you see something you like. Now, what do I have showing here? Australian. This is interesting. So can anyone say why did the Australian plunge here? And this was predictable. We talked about it last week. What would drive the Australian dollar down? And we see the support level here that was broken. And then the next support level was broken. And this was easy to keep trading on. Every time it broke a support, we saw a plunge. We're talking hundreds of pips potential profit in short periods of time. What is it about the Australian? Yeah, bad news out of China. Good, Sue. The Australian exports, specifically iron ore and coal, are the #1 money source for Australia. All right, they're a big export nation, and those are their number one exports, iron ore and coal, and their number one buyer is China. Okay, and so many times as China goes, so goes the Australian dollar. All right, and so there's been a lot of bearish pressure on the Australian dollar, predictable that there'd be volatility with it and large potential movements. We talked about last week putting support levels. What kind of pending order would have paid big here? An easy sell. What kind of pending order sells if you put it below this support level and just waited for it to break? Yeah, that'd be a sell stop. Would have paid huge here. Very easy technical setup with fundamental reason why to do it. Right? You see support, you see this approaching the support level, and you say, wow, if there's continued bad news on coronavirus, news out of China, then you might see this break. And so a sell stop pending order down here. As soon as it broke the support, it respected it and down it went. So very easy move. And then we see this pullback up today, right? So coming into today, we see a pullback up, and maybe we go to 1 hour candles to get a little better look. And we see the Australian dollar trying to recover a bit and trying to find its way. So if there's any continued bad news out of China, if you start to see bad economic numbers now because of the shutdown for the past month or so that's gone on in China, and most all the experts are saying they expect some bad numbers this first quarter now out of China. And so you start preparing that, okay, where's a support level? Where could I put some sell stops in case something like this happens again? All right, so it's something to keep in mind. You can start laying lines for support levels. Here's a support level on the 1 hour candle. Support. The market's tightening here, like it doesn't know what to do. High points are getting lower. Low points are getting higher on the 1 hour candles. Something's got to break eventually. Okay, so you could set up the same way as we were talking last week. Find your support levels and start placing pending orders in the direction that makes sense for potential large movements. Okay, and what if China announces some large stimulus moves, lowered negative interest rates, maybe government stimulus to the banks to spur the economy? You could see the opposite movement. You could see a rapid strengthening of the Australian against the yen, and the yen being a safe haven currency, that if there's good news for China and good news for the Australian dollar, then probably the yen being a safe haven currency would weaken. So that's why you might pair the Australian dollar against the yen. Bad economic news, Australian dollar might weaken and yen would strengthen. Good economic news, yen would weaken and the Australian dollar could strengthen. So it's a good pairing combination, because when one is strengthening, the other tends to weaken and vice versa. Okay, I wouldn't pair necessarily the Australian against the USD. We see the USD is getting weak today. If I'm setting up a sell stop, potential sell move on a weakening Australian, I don't want to pair it against a weakening USD. I'd rather pair it against a potential strengthening yen. Okay, so you think about sell stop, probably Australian yen makes more sense, and same for a buy stop pending order. So I might be drawing lines on a resistance up here saying, boy, if it breaks back above this high, must be really good news on the market, and have a buy stop prepared up here. And I also could prepare below this support level for potential bad news and a breakthrough the other way. So setting up, remember I said, well, you can prepare for the unknown. We don't know what the next article is going to be. We really don't. And Delwyn, that was one of the next things I was going to show. There's a rate decision tonight for Australia. So we talk about unknown articles, maybe could break out at any time that could cause a breakthrough move. We also have some known news potentially coming. Well, we know the news is coming, potentially could be unexpected news. And let's get to, here it is, economic calendar. What do we see later tonight? Okay, interest rate decision out of Australia. What if the expectation is they'll keep the interest rate the same, right? 0.75%, 0.75%. What happens to the strength of the Australian dollar if they lower the interest rate unexpectedly? What do you think would happen if they lower it to 0.5% instead of 0.75? Yeah, exactly. Maybe a rapid weakening of the Australian dollar. So because of this coronavirus fear, because the US is saying they might lower interest rates, China's saying they may lower interest rates further, and other nations are saying the same thing to try and counteract the economic effect, to make it easier for businesses to get cash on hand for with cheaper interest rates. Maybe Australia will surprise and lower their interest rate. It's a possibility, right? Certainly, I wouldn't expect them to unexpectedly raise it. Anything's possible, but it could be that they would unexpectedly lower it to keep up with what's going on with the other economies in the world, saying they might lower interest rates. So could be some big movements with this tonight. So setting up on the charts, okay, with potential sell stops below a nice support level could pay very, very well. And you don't have to risk much. If I put a pending order down here, and for those of you who haven't used pending orders, very simple to set up. Let me find the Australian JPY here. Where is it? Where is it? Australian, New Zealand. Well, I've got it on the chart, so I can just click new order. Apologize. Australian JPY. Okay, so I can switch from market execution to pending. Okay, if I think there's a huge potential for a breakthrough down, I can put sell stop, and I can say, okay, if it breaks below this mark, 69, let's say 9.3. Then maybe I want to get in on a sell with my stop loss just back above, maybe to 70.15, risking less than 20 pips. That's up to everybody individually. How far would you put your stop loss away? Would you even use a stop loss? Maybe you'd put a hedge position up there instead. There are different ways to handle things. This is just an example of how you'd set up a sell stop. The exact numbers I'm putting, certainly I'm not telling you where your exact entry should be or shouldn't be. That's up to you to decide. But it makes sense that a buy stop would be activated after a broken support, because that would demonstrate momentum in that direction. Your stop loss would make sense to be back above that support, because it should become resistance once it breaks. And so I could do that, and then I'd be looking, where would my potential take profit be? My first support level I see right here, okay? Maybe down around 69.45 or something like that for a take profit. If you're scalping, right, for a short-term move. And then I can place that pending order. There it is. If it breaks down to this green dotted line here, it enters. I'm risking about half as much as my potential take profit down here. If I say, well, I don't need to have my take profit, my stop loss up that far, well, I can have it closer, can move it down. I don't have to put it in that exact spot. But this is an example of preparing for a scheduled announcement that you know will occur, that you know might have high potential profit. Okay, and you can set it up accordingly for a move. All right, so huge potential for movement on the Australian, and that's one way you could set up for things. All right. What about gold? Let's talk about gold. Gold was dropping, breaking support level during times that people thought, hey, there's fear on the market. What the heck's going on here? Why is gold dropping? Bonds were being bought into. That's one major answer to why that happened. The yields were nice on bonds. The price was not so high. As people bought into the bonds, the price has gone up and up because of demand, and banks lowered the yield because there was such demand on them. They didn't need to offer so much anymore. And now it's gotten to the point where the yields are strikingly low. And what happens to the yield on these 10-year bonds, different length bonds that the banks are offering, if, let's say, the US lowers interest rates, that lowers the yield on bonds as well. Banks aren't going to offer high yields when interest rates are dropping. And so more and more, if interest rates are being lowered, then the attractive safe haven more becomes gold rather than bonds. However, lowered interest rates could cause a rush out of the safe havens temporarily and into stocks and indices again, right? So you have to play it both ways and be ready for the swings. You don't know when the FOMC committee or any country might unexpectedly announce, hey, we've lowered interest rates. And so you have to be prepared for that in your trading strategies. Right now, I see a major resistance level right here. This was a support, 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 and breakthrough. Now it's kind of been meandering up today. Gold came back up a bit with the yields dropping on bonds. We see gold pulled back up. That's why it pulled back up. We saw the article. Even though fear was dropping today and the markets were rising, gold went back up. Why? Because bonds are less attractive now as a safe haven. So now we're in the middle of a movement, really. Let's go to 4-hour candles and we say, okay, we've got a support level maybe down around here, right? Support level. If it breaks down below the support, you could think about having a sell stop ready to go. Prepared for potential lowering of interest rates, monetary moves by the central banks of different nations. And if gold decides to plunge, if it breaks the support level, you could have a sell stop ready to get in for these short-term type breakthrough moves. If, as we look at the 1-hour candles, gold breaks back above this old support level, that's a pretty significant move. If gold breaks back above this 1625 zone right here, which was an old support breakthrough, it took a lot of momentum to break below it. It would take a lot of momentum to break back above this mark. If gold breaks above 1625, you might logically say right in this area, I have a buy stop prepared. That might make sense. Okay. Technical analysis wise, it might make sense. And also fundamentally, you'd have to expect, there must have been some pretty negative news to get gold to break back above this old support. That price level seems significant, around 1625. Okay, so we're looking at this movement being the indecision right now. And you might say, wow, that's quite a span. Almost a $40 span here between the resistance and the support, but that's what it is right now. And gold has been moving $20, $30 in short periods of time. Okay, so it won't necessarily take much time if there's momentum one way or another to break this resistance going up or to break this support down here going down. Okay, and the exact location of this support could be argued depending if you want to count these wicks or not, but somewhere down here, certainly there's a support level that if it breaks, it certainly must have some momentum. All right. I'd have my eye for potential breakthrough back through 1625 or so, and that being maybe a signal that there's some negative news on the markets again. And, with this virus spreading, I don't think it'll take much if there are announcements in the US or other major economy nations that the virus is spreading worse again, and maybe they start talking about needing to have quarantine areas. If that type of news comes out again, all of this relaxation that's occurring on the markets today, you could see the fear strike right back in. And with yields being so low on bonds, even more potential for gold to have a drastic move. Okay, so again, it's not trying to guess the markets. It's preparing for the potential movement that the markets could bring based on the fundamental news that we know exists and that could exist, that we know certainly could happen over the coming hours or days. Okay, and don't forget, when I say 1625 breakthrough means could be a lot of momentum, and you think, well, how much further could it go up? Look at the 1-day candles. It was not long ago that gold was up at 1690 or so. Okay, just 1 week ago. So to say 1625 is way up, it is up a little bit from where it is now, but we want to look at how do you establish momentum, and momentum in terms of technical analysis is a major support level like this one around 1625. If it gets broken, there must be a change in today's momentum, all the green we see today, if gold breaks through a level like that. Okay, so a lot of times you're willing to give up some of the potential profit and get in at a higher price before you buy because it confirms momentum first. And same with the sell. You're willing to wait sometimes for the support level to get broke before you sell because it confirms momentum in that direction. And in this effect, we're not trying to guess the market. We're preparing for the potential, okay, which is huge right now with gold. And I think huge on the upside even more in the short term because of what happened with bond prices. All right. All right. So, and bond yields specifically. High bond prices, low bond yields means gold is maybe more attractive now. Any questions before we move on to another asset? Questions or comments? Good question. What about Nasdaq? Okay, let's take a look. And I want to take a look at Boeing and Apple as well. Okay, so look at this. So predictable. We see the general resistance level right in this area. This was the old support. We're on 1 hour candles, so this goes back to last week. Support, support, breakthrough, becomes resistance and down. And today's optimism, up, 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 up. And predictably, where exactly did this momentum die? Right at this first resistance level that you reach in the market. So all the positive momentum today wasn't enough to break this first major resistance level that it came to. It hit and like a rock dropped back down. Okay, so you see potential here. If you feel there's bearishness to come further in the market, let's zoom in on this. You see a resistance level has formed right here at an expected location. If you think the markets are going to get more bad news before good with this virus spreading, this is an opportunity to short the market with a market move now and put your stop loss or a hedge trade up here. Okay, small risk to get above the current resistance, going with the bigger picture, maybe fundamental news that, hey, there's a pandemic potentially still occurring. Take advantage of the pullback up in the market and small risk to get to the other side of this resistance level for a stop loss or a hedge trade with huge potential profit if the fear comes back to the markets. Okay, let's go back to 30-minute candles, maybe 1 hour. Coming into today, coming out of the weekend, there was a gap in the market down. And Otai, you're asking why did the gap occur? There was still enough fear in the market that the price gapped down. Okay, it happens. And so the price gapped down and quickly filled the gap. And by the way, that's an easy strategy. Okay, if we go back and take a look at where did the gap occur, maybe we go 15-minute. Okay, we see where did the gap occur coming into the day today here. As soon as the price gapped, it went sideways. And the trade the gap strategy is if after a gap, the movement re-enters the gap, rather than continuing in a downtrend, the movement re-entered the gap. Right here's where it entered the gap. Many technical traders say trade the gap, then it's going to fill the entire gap many times. Okay, so Imran, being a beginning trader, Otai, you asked about the gap. The gap occurred because of fear. The optimism on the market then came early this morning with the US talking about maybe lowering interest rates, other nations talking about doing that. So with the optimism coming in, we see the gap got entered and refilled all the way back up to where Friday's price closed, which was right here. Friday's close, it returned right to that spot and then hesitated. Okay, so a simple strategy that many times can work. You see a gap, you see it re-enter the gap. You could have had a pending order waiting, a buy stop, that if it re-entered the gap to buy and to sell once it got close to filling the entire gap, which was right up around there. Okay, that's an easy strategy. It would have worked very good today. And we see it continue to break through with upward momentum. So let's go back. And so then now the question is, okay, great. If I would have traded to fill the gap, I would have won. I didn't do it. Or maybe you did, but what's the next move? The next move is we see it reached the first major resistance level and did not break it. Right on cue, it dropped from that resistance level. Okay, so the question is, what's next? The answer is, who knows, in terms of unexpected fundamental news, right? We don't know what the next breaking article might be. You can have a suspicion that this virus is still spreading, that the numbers will get worse before they get better, and that other nations might start doing shutdowns of areas of their economy to quarantine areas. And so if you suspect that that might happen, that things might get worse before they get better, you could view this rise today as an opportunity to sell. Okay? And so if you view things that way, we just talked about, here's, as I zoom in on the 5-minute candles, I see a resistance level. I could do a market sell on the Nasdaq. Okay, there's a quarter of a lot, I'm in. Whatever trade size is right for you, if this move makes sense. And then I can go up and I can put my stop loss above the resistance, maybe 87.50. That gets me up above today's resistance that was established. And my potential profit may be down here at the first major support level, around 8,400. Okay, so there I go. I've got a move going with the bigger fundamental news that, hey, there's a potential pandemic right now in the world. Going with the technical entry point that, hey, I got a high point in an otherwise much larger, strong downtrend that occurred last week. And maybe thinking the bigger fundamental news is on the side of bearish movement here rather than upward movement being continued. And so then I get in on that move. And, you know, if I'm a scalper, boom, I'm up $100 already. All right. Boom. I just made almost $200 profit. 195 was the last number I just saw. Okay. Why do I expect downward movement? We talked about the fundamental news, right? Now, don't have to risk much for large potential movement. And by the way, you might risk this small amount here and you might say, I don't have to take my profit at the first support level. I can look at 1-day candles and say, listen, if this thing continues in a large downtrend again, it likely could break this support and go all the way down to something like 7,500. Now you're looking at huge potential profit. And in those types of breaks on support levels and drops with a pandemic potentially occurring around the world could happen. And so you could take your first move based on a short distance coming down. And, you know, you could take a partial profit. You don't have to close the whole thing. If it drops to that first support level, you could close half the trade and then leave the rest to go in case it keeps dropping, if that's what you feel could happen. Or close the whole thing at the first support and have another sell stop below the next support level. Have a sell stop, I should say, if the first move was a market move, and have a sell stop down here, take profit on the first move above the first support level, a sell stop in case it breaks it, you get back in. All right, again, setting up potential based on what you feel the larger fundamental news is. And certainly you could think the opposite and have a buy stop up above this resistance, and if it breaks through, be ready for that as well. Okay, you don't have to play this just one way. Okay, if because Maybe Australia lowers interest rates tonight. Maybe the US announces lowered interest rates, etc. Maybe there's a breakthrough in the opposite direction. If it breaks this resistance, it's got to have some positive momentum. Something new must have happened that we weren't expecting. And so at the same time I'm selling on my market sell with my stop loss up here, I can also have prepared a buy stop above that resistance ready to go, just in case that unexpected type of fundamental news happens. Any questions, comments? Okay, good. So prepare for large potential movements here on the indices. All right. I think market moves look nice on the indices right now. If you have a bearish outlook on the markets, backing that up with buy stops. If the momentum continues up, it could be rapid. We saw 1,000 points drop on the Dow in one day. It certainly could go up 1,000. Okay, be ready for it. You don't have to be right. You just have to be smart with setting up potential moves in the right places. Okay, preparing for the unknown and trading with the known. Okay. All right. So, and we easily, instead of Nasdaq, could be looking at Dow Jones. It looks the same. They're like mirror images. DAX 30 mirror images. They all pulled back up today. They all have resistance levels. We could put buy stops above the resistance and go with market moves on sells if you feel the downtrends are starting. Okay, which I see it on most all the major indices around the world. So, all right, next idea. Let's look at Boeing and Apple. Okay, Apple, if we look at, let's look at maybe 1 hour candles. We see it gapped up today and rode up to this resistance level right here. Okay, this was an old price closing on one day and opening with a gap down. Okay, so this rush up today, it filled this first gap and stopped. Okay, again, if you think this is a temporary rebound and that the bigger picture is more doom and gloom, what a great opportunity to sell, to short Apple now. It gained like 6-7% today during a potential pandemic that's affecting China hugely, right? In the coming quarter, people think, and Apple has a lot of their production capabilities in China. Okay, so this could be huge. All right, to take a sell here isn't because you think for sure you know Apple will pull back down. It's because, wow, what a strategically nice entry point, technical analysis wise. I could prepare a hedge trade up here as a buy stop in case I'm wrong, to hold the position until it maybe potentially does drop. My buy stop could have the stop loss back below. So if I take a market sell on Apple now and it goes the wrong way and breaks through, I can cover myself with a buy stop and not have a stop loss if I think in the bigger picture it's going to come down eventually, and cover myself with a buy stop. And then if it does eventually break back below the support, my stop loss is on the buy stop and my sell position remained open for maybe the bigger move. Nituthuzelo, I'm sorry if I butchered your name. Yeah, listen, the short summary, you're saying you joined us late. The short summary on the indices, a lot of fear drove them down last week. Some optimism about government support, lowering interest rates, more cash on hand to banks from governments. This created some optimism in the markets today, and we see the indices and stocks have pulled up some today. Bigger picture is still a potential pandemic on our hands, and maybe a lot of reason to think that these pullbacks up, the pullbacks that occurred up in the market today, maybe could be short-lived. All right, but continuing to back ourselves up in case that's wrong. You can take your shot at a return to dropping markets. You also can back yourself up with buy stops in case it breaks through the resistance. Okay, this certainly could happen. If the US announces lowered interest rates and people more and more think it's going to happen, if China keeps saying they're creating more stimulus and going to help their economy, we could see Apple break through this resistance and go back up through the next gap, which was here. If it breaks this resistance here and climbs, it certainly could run up through the next gap. This was a downward gap. This was a downward gap. It refilled this gap already today. If it breaks through, it could be on a run to fill the next gap. So prepare with a buy stop. Go in the direction you think will occur with the current news. Okay? So I think huge potential with Apple. The reason I picked out Apple is because of the Fang group of shares, Fang being Facebook, Apple, Amazon, Netflix, Google. Okay? Apple jumped the most. All right? And so it has the most room potential maybe to pull back down. If we look at the 5-minute candles, you see resistance starting to form, potentially ready to pull back down. All right? No guarantee, so limited risk. Prepare for a breakthrough. Go with the direction you think makes sense right now in the bigger picture. Okay? Let's then look at Boeing. Why am I saying look at Boeing? They're an airline, right? What's been happening to the airlines with this whole coronavirus thing? And let me find Boeing. It's here somewhere. There it is. Okay, so we see Boeing on the 5-minute candles today up and running. All right. Why? Because of talk about stimulus, helping the economy out, all of these nice and dandy things. If we go to 1-hour candles, what do we see? This gap was filled. Last week's gap just went up, or I'm sorry, this morning's gap down was refilled. Again, fill the gap strategy would have worked today. After the gap down, it went rushing back up through the gap. So it gapped down. Soon as it broke into the gap, you could have been trading up on Boeing, and that would have been a nice potential profit. Now, do we feel? Here's the question. Yeah, Delwyn, lots of canceled flights, lots of slowdown in business for the airlines for sure has been happening. Do we feel that all of a sudden the airlines are going to do great and they should recover tremendously? The virus scare is over and people are going to start traveling from nation to nation without any fear of catching this virus? Probably not. That's probably not what's going to occur, right? Still a lot of fear, still a lot of travel restrictions in and out of different countries. I don't think that today's optimism is necessarily going to hold in the bigger picture for the airlines right now. Okay, that's my opinion anyways. Your opinion can be different. I don't necessarily see Boeing breaking through and maybe filling the next gap, that sort of thing. It could occur, but we have to go with what we know fundamentally right now. So if you feel that there's more reason for Boeing to drop than to rise, then this is an opportunistic entry point to get in on a stock that was in bad shape, that pulled up. And you have to remember, Boeing has other reasons that they were having problems. This, Air Max, the new plane they designed that crashed twice. They had all kinds of problems before this pandemic scare. So now they just have more reasons to have problems. So if you feel you want to short Boeing, then you might say, okay, it's formed a resistance. I could sell on Boeing, and I could say if it breaks above the next gap, then I'm out. That sort of thing. And looking in the bigger picture on a one-day candle, maybe that makes sense for you. And maybe I get rid of some of these lines. I've got a few too many from the past weeks. Let me just delete all these objects. There we are. Okay, so obviously bigger picture, we've got an old support line here that was broken. All right, so if you're being more patient with this current optimism, you might wait until it reaches a major resistance level like here. That wouldn't be until up around 300 on the stock price, which means a patient trader might wait another 11 or $10 before they'd short it, before they'd sell. Because on the 1-day candles, here's the support, here's the breakthrough right here. So if you think this could rise, 1-day candles, maybe you're waiting with a sell stop somewhere up around, oh, I don't know, 297 or something, somewhere near that major resistance. If you are a trader that doesn't have to have the perfect entry point, and you feel that Boeing has more reason to drop than to rise, then you might not wait for that resistance level up here. You might say, hey, I'm ready to short it now, and I'll just put a hedge trade up here somewhere if it goes the wrong way, to maybe help ensure that you don't miss a potential drop. So those are different preferences for traders. The fundamental news is bad for Boeing, for sure. The temporary optimism, sure, Boeing could rise a bit more. It's up to each individual trader where they think that could stop before maybe a further drop might occur. So just something to look at. A stock that's been in trouble anyways, a stock with more reason to be in trouble now with the airline suffering from this global pandemic scare, and an opportunistic high point maybe for that type of stock. Listen, Otai, if you put pending orders right before the market closes before a weekend, you're not going to get the price you necessarily want if it gaps in your direction. You'll get the first available price at market open. So you can't, that sort of trick is not going to work, because you're not going to get the entry price you wanted. You'll get the entry price that's first available when the market opens, wherever the price gapped to. So that's a good question, and that's a hard lesson to learn. For sometimes people think that they get that pending order in and the market goes through the weekend and it gaps huge, and they say, wow, it went $100 maybe in stock value in the direction that I wanted, but that's the price you get instead of the lower price that you wanted, because the first available price after a gap is what you'd get. Okay. For example, here, if you had a pending order at this price here that you put in Friday, and the open price was down here, you would have gotten this price down here, not up here on a sell position. Okay, so keep that in mind when you're allowing pending orders to run through the weekend. A lot of times there are big gaps on the weekend. It can work for you or against you. Okay, so Boeing, I think, huge potential opportunity here, as well as Apple. We see the movements. We see the larger trends are in the opposite direction of the movements today. Something else to look at, and I think it'll be the last thing we look at, copper. Okay, copper pulled up with today's optimism. What tends to happen with copper when there's bad news for the economy is it tends to drop, because copper's used a lot in industry, copper wiring, etc. Okay, so as gold goes up, many times copper tends to drop, and vice versa. So potential opportunity here with copper reaching a resistance level. Okay, we've got a major resistance level up here. Hasn't reached that yet, but when we look at, say, 30-minute candles, we've reached a resistance level here. We see the spike up, we see the drop back down, we see the return towards this spike location. So you may think about at some point, how much further do you think copper will run up before the overall doom and gloom takes over again? Okay, and we can see how low copper dropped recently with all the economic scare that's been going on, all the way down to 2.50 basically. And right now it's all the way back up to 259, 260 almost. So could be a potential for a reversal on copper if the news breaks bad again. All right, so something to keep an eye on here with copper as well. All right. Quick look at currencies. We talked about the pound and the euro. I'm having some requests. So let's look at Euro GBP. Remember, I showed you earlier today, this morning, there was a positive economic announcement in the European Union, specifically the German economy had good numbers that came out, and the pound had bad announcements on the largest announcement this morning for the pound. And look what happened. You could have rode this trend all day today. Okay. Uptrend, 30-minute candles. That's here today. This is the climb today. So we're talking, what, 85.90-ish to 87.42. Huge number of pips profit today. Maybe 100 pips profit you could have made on Euro GBP. Just simply going with the fundamental news we looked at and waiting for a breakthrough on the chart. Where was the breakthrough on Euro GBP? Right here. Here's the resistance. Here's the breakthrough. The breakthrough occurred today after those positive announcements for the euro and negative for the pound, and up it went. Okay. Today alone, easily you could add 20 pips profit, maybe more, depending on your timing. Okay. So certainly bullishness with the euro and weakness with the pound right now. If we look at the bigger picture, 4-hour candles, the next resistance level is right about here. Okay. The major resistance is around 87.90 or so. So it's got a little ways to go, maybe 15 more pips, and you may see a pullback. You'll see some resistance maybe right at this level. It was an old support level on the one-day candles and a breakthrough, which becomes resistance here. This may have some momentum yet until it gets to that point. All right. All right, great. So I think we'll stop here. Thank you for joining. Look for some great opportunities on the Australian with the bank decision tonight and the whole China economic scare and coronavirus scare. I think we're going to see big movements on gold. I really do, as well as the indices with continued volatility. So set up those market moves backed up with your pending orders, buy stops, sell stops. If you're wrong on one, you may be right on the next one. And even with even less than a 50% success rate on being right, you can have huge profits if you catch one of those big movements on the indices, on gold, etc. Okay. All right, great. Thank you for joining me. Until next time, good luck with your trading.